Okay, question number 16. So debtors are the people who owe you money because you have sold them goods and they haven't paid for those goods yet. All good till this far?
Yeah.
Okay. Then when you have certain debtors who owe you money, there would be some of these people who will not pay the money that they owe you.
Yeah.
Okay.
So they are bad.
So they are the people who, for example, right now they haven't actually defaulted. They haven't clearly told that they'll not pay you. But if they down the road do not pay you, this expense actually belongs to the year in which you could have estimated that these people are not going to pay you. That is why at every year end, we know for all the debtors that we have, there is going to be a certain amount among them who are not going to pay us the money that they owe us. All right?
Yeah.
That is what we call provision for doubtful debts.
So we'll make an account. We will minus 90,000 minus 5,000.
Okay, let's see what the question says. So the question says sundry debtors in a trial balance 90,000, write off 5,000 as bad debts. So when you write off 5,000 at bad debts, you'll simply write bad debt expense debit and accounts receivable credit. That is going to be the double entry for writing off bad debts. There are among bad debts, then we can say that there is going to be a certain class for which you just estimate that they're not going to pay you. And then there is going to be a group of them which have actually defaulted and for which you now know that they're not going to pay you. For this particular group, you just deduct their amount from the accounts receivable.
Okay.
So the entry that you will pass for this particular person who has defaulted and for whose debt we have to write off, we will pass the double entry. Let me write it over here. Give me 1 second. We'll pass the double entry bad debt expense debit accounts receivable credit. I'll write it on this side, in fact. 1 minute. So when we write off bad debts for this particular person by how much? By 5,000. What's the remaining amount of debtors? 85,000. On this remaining 85,000, we are going to provide the provision. We are going to create the provision. I'll show you how. Just a second. 1 second. 85, you have to create a provision of 10%. Yes, 85 into 10 by 100, which will be 85,000 into 10 by 100, which will be 8,500. So here are the entries that you have to pass. They say pass necessary journal entries. So we have to show the journal entries over here. Okay, so the journal entries would look like this. First of all, I'll have the entry. Bad debt expense debit. By how much will I debit it? By 5,000. And accounts receivable or debtors, whichever. Accounts receivable credit by how much? By the same 5,000. This is the first entry. Then we can write narration for this one if we want to. Narration would be to write off bad debt. To write off bad debt. Okay. Then the other entry would be to create the provision. Since we aren't told that there is any existing provision, so the assumption would be that there isn't one at the time. Next entry would be bad debt expense debit, provision for bad debt credit. And this one will be by how much? 8,500 and 8,500.
For the second thing you wrote, account receivable.
For the first thing I wrote account receivable because this is what I'm going to write off. I need to eliminate this from the books. See, the provision that I'm creating, these bad debts, they are not being eliminated from the book. They are still in my books. I will just deduct an amount of provision from the total bad debt expense. Sorry, from the total debtors expense. As for the one who has defaulted, I know that this person is not going to pay me. I need to write off. Write off means I need to remove it, all the traces from the book for this one. So if I need to remove this from the debtors balance, I will simply write bad debt expense debit and accounts receivable I'll credit because I'm removing it from the debtors account. Narration for this one will be to provide for bad debts at 10% of debtors. Still not understood? You're still confused about this bad debt thing? Aisha, are you still confused about this bad debts thing? My internet connection is seemingly stable. Your voice is breaking. Could you please restart your router or rejoin the meeting?
I got disconnected.
Okay.
Where were you though?
Where was I? As in?
No, like an explanation.
An explanation. I was just asking you the question if you understood this concept of provision for doubtful debts, or do I need to explain it further?
No, I think I got it.
Okay. So one takeaway from this current question is that there are two types of, if I may say, bad debts. One is if I create a provision, this is that nobody has defaulted yet. It is just an estimate. Since we do that, the accounting concept of prudence says that whenever I expect an expense, whenever I'm sure of an expense to occur, I'll just record that expense. Okay, for example, the same way we recorded the expenses for electricity and salaries and wages. We haven't paid those salaries yet, but historically speaking, and knowing that these people, they have worked for the month of December or the last month for which we haven't recorded the salary expense, we are going to pay them. So we record their expense on the basis of estimate. Similarly, the electricity expense, we had been using the electricity, running everything on electricity for the past month. It's just that we haven't received the bill. So we know that there is going to be some electricity expense. We will just estimate that and record an expense based on that. Similarly, for this bad debt expense, I have debtors I know historically speaking, some of them they default, and then the year that they default in, suddenly I'll some year I'll have like a huge expense, some year I'll have. So in order to maintain consistency and in order to have prudence that some of these people are eventually going to default, how many? It's going to be an estimate of the business. So based on that estimate, they will record that expense before they actually default.
Yeah.
Okay, because as soon as they know them that there could be a default, in terms of accounting, they have to record that as per prudence.
Okay.
Understood? So these will be the double entries. If I were to show how these things that appear in the financial statements of the business, they haven't asked for this in this particular question, but still I'd like to show you. For the PL account, I can show. There are two ways to show it. I can show bad debts written off separately and bad debt expense separately, or I can show it together as bad debt expense. Both ways are fine. So I can show bad debt expense, which would be sum of 5,000 and 8,500. So it's going to be 13,500. And then for the balance sheet, I will show current assets. And within current assets, I will show the balance of debtors. Debtors is now how much? Debtors is 85,000. Because I have written off that 5,000, I have deducted it from the total debtors balance. And after that, I will deduct the provision for doubtful debts. Which is 8,500. So 85,000 minus 8,500, how much? It's going to be
7,700.
76,500. 76,500 it's going to be.
Yeah, that's fine.
Done?
Yeah.
Okay. So here we are with, shall we move on to question 17 now then?
Yeah.
Alright.
Yesterday I was going through a video, and so far what I got from like the adjustments chapter, like in like all of those heads of accounts, like no wait, I don't know if you call them heads of accounts.
What heads
like
of accounts?
Like outstanding expenses or prepaid expenses, depreciation. They all have to be entered in either of the two or three, like trading account, balance sheet, profit and loss account. And in the video, they were basically telling which will be debited and which will be credited. Yeah.
So the thing that we need to know, everything that happens, all the accounting that we do in the books, the basis of recording, the way in which we actually record the stuff is double entry. That is one thing. So all that we need to know is every accounting event that happened for which we need to do accounting, there is going to be a double entry. A double entry will have its impacts on two accounts. It could be an asset and a liability. It could be an asset and an expense. It could be expense and capital. But we know those five heads of accounts: assets, capital, liabilities, income and expense, all the double entries, they will have impact on, it will have two impacts, either on two separate heads of accounts, or it could be on just one head of account. For example, an asset increases and another asset decreases. These adjusting entries, they usually have impact on different heads of accounts, by the way. For example, in the normal course of business, if I buy an asset paying by cash, paying by check, my asset of bank is decreasing and the other asset that I have bought is increasing. So one asset will be debited, the other asset will be credited, because increase decrease of asset is, that's how we do it. Increase of asset is debited, decrease of asset is credited. Are you following me?
Yeah.
But for the most of the journal entries or the closing entries that I can think of right now, they will usually have impact on either one asset, one expense. They would have impact on, they could have impact on expense and capital. For example, the purchases and drawings example that we did yesterday. So these are usually the common types. But what we need to know is, for every event, we should know what is the double entry for this event. You should always be thinking of accounting in terms of double entry. And once you know the double entry, you will know which particular T accounts are being impacted. And then we know those T accounts, where they are reflected in the financial statements, where they are reflected, whether they are in the trading account or the PL account or the balance sheet. And then we will know how to adjust them. So it's like the complete chain. You should know double entry. You should know the T accounts that would, obviously if you are passing the double entry, you'll know the T accounts that are being impacted by it. And you should know where those T accounts are eventually reflected in the financial statements. So we will make adjustments over there.
Okay.
All right. On to question number 17. So let's read it together. Arun is a trader. While preparing financial accounts on 31st March 2019. So the first period given is 31st March 2019. Okay. He made a provision for doubtful debt, 4% of sundry debtors, amounting to 42,000. Okay. So previous year, his accounting, the rate at which he created the debtors was 4%. And the amount of debtors was 42,000. All right. During the year ended, doubtful debts amounted to 3,400. Okay. During the year ended 31st March, doubtful debts amounted to 3,400. Fine. On 31st March 2020, debtors were 56,500. Provision for doubtful debts was maintained at the same rate. All right. So 56,500, and we will have to create the provision, maintain the provision at 4%. This one will be done easier if we prepare the T accounts for this one, and then we'll know how to do it. All right, let's see. If we are to do this one, let's say the provision for doubtful debts, it will have a brought down balance. Let me erase this thing that I've drawn over here. Since it's being deducted from the assets, it should logically operate. The accounting treatment for this one should be the reverse of assets. Okay. Here we go. All right. So first of all, I will have provision for doubtful debts. Provision for doubtful debts. Let's determine the opening balance. The opening balance or the brought down is how much? It will be 4% of 42,000. So what's 4% of 42,000? 42,000 into 4 by 100. Okay. 1680. This is the opening balance. Then madam, they told us that the closing balance is how much? The closing balance is 56,500. This is for debtors. And again, at the same rate, we have to maintain the provision for doubtful debt, which is 56,500 into 4%. What are you doing right now?
Nothing.
You should be calculating the 4% of 56,500, which is the closing carry down balance.
No, I'm still figuring out how is this question working.
Okay. Let's take a step back and re-look at the question right from the start. So this Mr. Aran, he does business, and in the year 2019 he realized that he should be maintaining a provision for doubtful debts. All right, he doesn't have one right now. So what he will do is he will pass an entry to create provision for doubtful debts. What should be the entry that he should pass to create the provision for doubtful debts? Bad debt expense debit. Provision for doubtful credit. Any confusion this far? If there is any, if you want me to repeat this thing, I will. Shall I repeat it?
No.
Understood. Okay. What will be the amount by which, by the way, this is 2019. This is for the year ending 2019 that he's doing this thing. What is the amount by which he should pass this entry?
For the bad debt.
This is a double entry, right?
Yeah.
The double entries, they need to be passed with a certain amount. These are the the T accounts that will be debited and credited. What will be the amount that will be written in those T accounts?
We just calculated 1,680, right? So that
we did that, but are you 100% sure what we did over there and for what purpose we did that over there?
Yeah, we were bringing down the balance.
We were bringing down the balance for the year 2020. Okay.
Yeah.
That was the balance that was created in year 2019.
Okay, yeah, they mentioned 3,400 for 2000.
No. Forget what we did back then. Let's look at the question again. Arun is a trader While preparing his financial accounts on 31st March, he made a provision for doubtful debts. He did not previously have a provision for doubtful debts, he just made it. He made it by what amount? 4% of the sundry debtors. Whatever the amount of debtors, 4% of that he expects is going to be the bad debt expense. So by that amount, he created a provision. The word provision means you are going to provide for something. You expect something to happen. Okay?
Yeah.
So he expects that 4% of the debtors that he has, they won't pay him, or the amount he won't receive by 4% of the total debtors amount that he has. Alright, so what's the amount of debtors in the year 2019? 42,000.
Yes.
So what's the amount by which he should create the provision in the year 2019?
Didn't we just calculate that?
We did.
Yeah.
So I'm asking you again, what was that amount and how did we calculate that, and are you sure you got this?
Okay. 42 into 4 by 100, we got 1680.
42,000 into 4 by 100, so we got 1680, 1680 and 1680. This is what will happen in 2019. And how will this entry be reflected in his financial statements for the year ended 2019? This will be reflected in his financial statements in this way. He will have a PL account. In PL account, he'll write bad debt expense. And in front of bad debt expense, he will write an amount 1680. Alright?
Yeah.
I still don't get whether you're understanding this thing or if you're confused over this thing.
No, I got it.
31,319. Okay. So what will appear in the balance sheet? This is just one impact of the translation. The other impact of the translation will be on the current assets side. Current assets, I have debtors. What's the amount of debtors? 42,000 was it? 42,000. Less provision for doubtful debts. How much is it? 1680. So what's the amount of debtors, net debtors that would appear? 42,000 minus 1680. What's 42,000 minus 1680? Don't use calculator. Tell me.
No, I'm not using. One 320.
It will be 40320. 40,320. It's from 40, because from 42,000 we are deducting 1680. From 42,000 of debtors we are deducting 1680 of provision.
What was the answer?
40,320.
Yeah.
Alright. So understood, this is what the financial statements of 2019 will look like. Okay.
Yeah.
Take a look at it again, and then we'll move to year 2020.
Yes. Yes. Got it.
Okay. The next year, what happens is that he has a doubtful debts amounting to 3,400. I'll tell about this one, how we would treat this in a minute. Okay. What other information we have got is on 31st March 2020, sundry debtors were 56,500 and the provision for doubtful debt was maintained at the same rate. So it means this year too, I have to maintain it at 4%. Alright. So let's prepare the balance sheet first for 2020. So 2020 now. Balance sheet would look like this. We have got current assets. We have got debtors. Debtors are how much this year? 56,500. Agreed?
Yeah.
Less provision for doubtful debts. Which is going to be 4% of 56,500. How much is that?
$2,260.
56,500 and 2.04. It will be 2260. And what will be the amount of net debtors? 56,500 minus 2260.
Wait, what did you say?
What will be the amount of debtors, which is debtors less provision for doubtful debtors? The net debtors amount 56,500 minus 2,260.
Um, 54240.
54240. All right. In order to understand what amount will go to the profit and loss account, we need to look at the T account for provision for doubtful debts. What would it look like? The T account in the year 2020 will look like this. We have got, this is provision for doubtful debts. Excuse me. Okay, so we have got a brought down balance, how much, which was the closing balance for provision for doubtful debts last year. How much was it? 1680. we have a carried down balance of provision for doubtful debts, which is the closing balance of current year. How much is it? 2260.
We have to make an account like that, like
I'm just showing this T account to you so that you understand how entries will. In the next question onwards, we won't be making this account because you would know how this works. Right now, just in order to show you, because I'll pass an entry and you wouldn't understand why that particular amount is the amount by which I'm passing the entry.
Yeah.
All right. So during the year, they have mentioned how much they have doubtful debts amounting to 3,400. Remember this 3,400? I didn't tell you earlier what to do with this one. This amount in the question. Okay. So what happens is, the way we have provision for doubtful debts is, I have a So if I have a debt, I've got an ongoing debtors balance. Alright. And for the debtors balance, whenever I say that there is going to be some addition to it, I will always try to pass it through provision for doubtful debts account. So in this particular case, what I will do is, I will pass the double entry to record this 3,400 provision for doubtful debts debit, accounts receivable credit. So it will appear over here 3,400 and debtors will be credited. All right.
Yeah.
Okay. And then if I now try to balance this account, I would see one side is bigger, the other side is shorter. Which side has a greater balance, the debit side or the credit side?
The debit side.
Debit side. So what I'll write on the debit side is the sum. What is the sum? 3,400 plus 2,260. It will be 5,660, right?
Yeah.
I will write the same sum over here as well, 5,660, and it would mean there is going to be a balancing amount over here. This balancing amount is going to be my expense. Why? Why is it going to be expense? Because provision for doubtful debts is being credited, the other account would be debited, and the other account is going to be profit and loss account. And when I debit the profit and loss account, it's an expense. Did you understand all of what I just said, or shall I repeat it?
Can you repeat it?
Sure. I'll repeat the whole provision for doubtful debts account again. We have a brought down balance, which was the provision which was created on the closing balance of debtors last time. Understood? 1680 was the closing provision for doubtful debts last year. I have current year's closing balance, which is the balance of provision for doubtful debts applied on current year's debtors balance. This is the brought down and the carried down. During the year, if I have any doubtful debts new among the debtors, I will simply pass them through the provision for doubtful debts account. I will debit the debtors account and I will credit the provision for doubtful debts account. Alright, so if I do all of this, then there is one figure which is pending on the credit side of the provision for doubtful debts account, and this is going to be this is going to be not the BD. The carry down I've already calculated, 2260. This is going to be the expense amount, the amount of expense during this year.
Okay.
I made a small mistake. Anyhow, just calculate this balancing figure over here for PL. Then I'll tell you one more thing.
Uh, 3980.
3980. And now see, this is the profit loss account. This is the expense for the year. 3980 as shown in the question. And this closing balance of debtors, the closing liability, the CD balance as well. This is the 2260, the balance sheet closing item, provision required. Alright.
Yes.
So this year, in order to record this particular expense of 3980, what I will do is I will debit the profit loss account by bad debt expense debit. Bad debt expense debit and provision for doubtful debts credit by how much? This is going to be 3980. Understood?
Yeah.
So this is the reason I made this T account, so that you know where this 3980 comes from and why. Why is more important. Why do we have this particular amount? Why not any other amount?
For the expense, or
this is the amount. This is the amount of expense for the year. Bad debt expense is 3980.
Yeah.
Okay. If you could now, if you want to look at this question again, these are the double entries that we have to pass. This and this. This is how the financial statements would look like for these two particular years. If I were to draw the PL account for year 2020, I'll show bad debt expense equal to 3980.
Yeah.
Alright. And this is the T account as well. In the next question, you'll have to draw just the T account. That is why we also need to know how to prepare the T account for provision for doubtful debts.
Okay.
Take your time, look at this question again, and when you have done doing that, you have to start the next question. Give it a go yourself, and then if there is any need, I'll explain it further.
So, for the next question, we are supposed to make an account for the provision for doubtful debts.
Yes. Okay, one more thing. Before we move on to the question, the reason there was one small thing, for example, in this particular question over here, I wrote the debtors. Alright, let me give you the complete scheme of entries that we have, and then we will see why I wrote debtors and why there could be another account that could be mentioned over here. See, if I have a business and I have got a closing balance for my business, a certain amount of debtors, this is the first year of business, let's say. I will create a provision for doubtful debt. So this is the first year that I'm going to create the provision for doubtful debt. I'll create the entry bad debt expense debit, provision for doubtful debts, credit by how much? Let's say 1000 and 1000. Okay, next year, so I have in year 2019 already recorded an expense for the person for some debtors amount that I'm going to have an expense of 1000. These are the people who are not going to pay me. Understood?
Yeah.
I have recorded this as an expense. Then what happens in year 2020, one of the people's for, or let's take the figures for this question, the last question that we did. We did 1680 and 1680. So I'm just changing the figures, the rest of the story is the same. So what I did was 1680 and 1680. Alright?
Yeah.
Okay. Then what happened was that in fact no, let me use 1000. I'm sorry, I'm changing it again and again, but let me use 1000 for now because there would be a complication involved if I use 1680. I'll also explain you with the 1680 figure why I didn't use that. Yeah. Okay, first let's understand the simple thing. So in year 2020, what happens is that somebody for whom I had provided that they will not pay me 1000, I expected that this person will not pay me, he actually defaulted, and the amount by which he defaulted was 700. So what I will do is I will write bad debt written off or bad debt account by how much? By 800, and debtors account by how much? 800. That is how I write off bad debts. Agreed?
Yeah.
But the thing is that this expense I am recording twice. Why? Because the last year also I created an expense that this person is going to, in this 1000, the amount of 800 was included. I expected that some people would default. Among them was this person, 800. So the expense that belongs to the default of this person has already been recorded last year. Do you get it?
Oh, yeah.
Okay, so if I record it again this year, it would mean I am recording this expense twice. So I will say, where did I record the bad debt for this particular person? You would say I recorded it in PL and I recorded in provision for doubtful debts. So I will say if this doubtful debt has actually happened, I mean that this person has actually defaulted. So let me remove his amount as well from the provision, because this person is not going to pay me, and the amount that is going to be there in 1000, that also needs to be removed. Did you get this thing? You didn't get this thing. I created a provision. In provision, let's say I said there are two people, one owes me 800 and one owes me 200. These two people will not pay. So now this 800 person has actually defaulted. His amount is included in the 1000 that I am carrying forward. There are two problems right now. One is that I am recording an expense which I have already recorded last year. The other problem is that this 800 is included in the provision for doubtful debts. Since I have removed this debtor from my list of debtors now, I have written him off. his provision also needs to be removed from where it is. Makes sense? Because next year there would be debtors, there would be a list of debtors from which the provision for doubtful debts will be created, and if I do not remove this 800 from the 1000, then it will again be deducted in the balance sheet. Whereas this provision, this person no longer exists. Are you following me?
Yes.
Alright. So in order to take care of both of these problems, what I will do is, first of all, the expenses being recorded twice, what I will do is, I will say bad debt account or bad debt expense, bad debt account credit by 800. So it is removed from the expenses. And also I need to remove from provision for doubtful debt. So provision for doubtful debt debit by how much? By 800. Provision for doubtful debt is a credit balance. It increases by when I credit the account. So when I debit, it will reduce, right?
Yeah.
Okay, so these are the entries that we actually pass in order to create provision, and when somebody from for whom we had created the provision, he actually defaults, this is the entry that we pass. Are you clear this far? Because then I'm going to tell you one more thing. Now I'm going to tell you why I wrote the amount debtors over there. See, the net impact of these two entries. I debited the bad debt account and I credited the bad debt account, right?
Yeah.
So the net impact of these two entries is zero, at least these two heads.
Yeah.
The debit account, the bad debt account was debited, the bad debt account was credited. We can do a direct entry instead of passing the entry 1 first and then passing the entry 2. We can directly pass the entry which is provision for doubtful debt debit by 800 and debtors credit by 800, because that is the net impact of these two entries. The net impact of the entry 1 and entry 2 that I wrote over here is what's written as entry 3 on the right hand side. Do you get it?
Yeah.
Okay, so that is why I wrote the term debtors over here in provision for doubtful accounts, that the net impact of this entry is going to be provision for doubtful debt debit. So I'm debiting the provision for doubtful debt and I'm crediting the debtors. However, in your book and otherwise usually we pass it like we pass both these entries. The format that they have followed is they pass both these entries. Practically speaking, they are going to have this impact. So we need to understand all of these things. What if we pass all the entries, and what if we don't pass all the entries and just pass this entry? Because someday you might be tested on this concept too. Take a few minutes, let it sink in, and when you have understood it, then I will tell you why. Then we will do it with the example 1680 and the amounts that we have in our question. In the previous question. First, take a look at this question for the example that I've drawn over here for a few minutes, and then we'll move forward to the next thing.
So from the 1 and 2, we're just left with 800.
We are left with 800 of debtors account credited and 800 of provision for doubtful debtors debited. For 1 and 2, we are left with a net impact in the form of 3. That's the net impact. But if we pass both entries 1 and 2, that would also be correct, and sometimes that's how we do things.
And for the bad debt expense, we're not gonna include 1,000.
I haven't told you the bad debt expense for the year 1 is going to be 1000. What's going to be the bad debt expense for year 2, 2020 in fact? That I haven't told you yet. That depends on what is going to be the provision for the doubtful debt in the next year and by how much amount do I need to pass the entry, and that's the balancing figure. That's something that I haven't done yet. So let's say in year 1 the closing balance of, if you want to know that too, in year 1 the closing balance of doubtful debts was how much? It was 1000. In year 2, when I apply the percentage on the closing balance, I get to know that the closing balance of debtors, the closing balance of provision for doubtful debt needs to be 2000. Okay? This is what needs to be the closing balance of doubtful debtors, provision for doubtful debts. Okay, so by how much amount should I pass the entry? I will say 1000 was the opening balance. This balance was reduced by 800. So what remains in this account is how much? 1200. Right?
Yeah.
I need to increase this account again by, no, it's going to be 200. 1000 minus 800 is 200, right?
Yeah.
I need to increase this amount by a certain amount, so its closing balance is 2000. By how much do I need to increase it? By 1800 I need to increase it. Okay?
Yes.
This was the opening balance. These were the bad debts for current year. Bad debts in current year. This is closing balance. And this 1800, the balancing amount, is by how much I will record the bad debt expense for current year. So I will pass the entry for year 2020 now. I will say bad debt expense debit by how much? By 1800, and provision for doubtful debts credit by 1800.
Okay.
Let me relate it now to the question that we had over here. So in year 1 we created a provision by how much? We created a provision by the amount 1680. Okay, so you said 1680 bad debt expense debit and 1680 provision for doubtful debts credit. This amount goes to profit loss account and this amount goes to balance sheet, right?
Yeah.
Because this is the first year that doubtful debts was created. Then there was a doubtful debt written off how much? 3400. So we passed the entry bad debt account 3400 debit, debtors account 3400 credit. Understood?
Yeah.
And since we are passing all the bad debt expense through the provision for doubtful debts account, that is where we record all the doubtful debt, we will say we need to reduce the provision by this amount 3400. So we will debit the provision for doubtful debt by 3400 and we will credit the bad debt account by 3400. Okay, and again this entry 1 and 2, it will have the net impact that provision for doubtful will be debited by 3400 and debtors will be credited by 3400, but you don't need to, I mean I'm just telling you this for extra knowledge, what will be the impact of these double entries. In fact, what you have written as debtors over here in this account, I suggest that you write bad debt account so that you know all the entries. You write bad debts account over here. And the reason is this entry 1 and 2. Okay?
Yeah.
So now that I have passed these entries, what is the bad debt expense that I need to record? I will say the opening balance of provision for doubtful debts was 1680. It reduced by 3400. right? So 1680 minus 3400 is how much?
1680 minus
3400
1720
minus 1720, right? Because from 1680 I'm deducting 3400. Agreed?
Yeah.
Okay. And what needs to be the closing balance of provision for doubtful debts? It needs to be what is in the balance sheet of this year. What's in the balance sheet? It needs to be 2260 positive. So it needs to be 2260. 2260. What do I add to minus 1720 so that it becomes 2260? I add 3980 to it. Okay, and this is going to be my bad debt expense. Got it?
Yeah.
And these are the entries. This is how we have done this question. It's a lot to digest. It's a lot to digest. Take your time. Take your time. What I'll do is I'll leave you with this question as homework. Question number 18, 19 we can do in the class tomorrow. Just do question number 18, and the answers are already mentioned over there in the book, so you can match your answers with those that are there in the book. And if they do not match,